Wonderful morning to everyone. Welcome back to the pre-market outlook discussion again with turnaround like behavior the market has given because of the India-Europe deal done on free trade agreement. So this is 28th of January 2026 with a globally important events along with the Indian cheerful event made with Europe deal and all. So we are moving or stepping into a new day with a new hope. The day we can expect the volatility will be escalatingly moving and the volatility as long as the India volatility index staying above 11 and 15 as a zones of resistance, we can keep experiencing the heightened volatility till it reaches 19 to 20 levels. This was advancedly predicted and reported even in the recently circulated weekly market outlook report. For the day, the opening would be flat to positive 1 and after immediately open, we can see the melting of the advanced points or gained points with the volatility. That is the main reason we are seeing the points what it experiences in the opening session will be get deteriorated slowly or even in a hasting manner also we can term it at. So because of the reason the higher premium between the January to February expiry, if you check out over 200 points of the premium difference between two series in the F&O. So the futures of January and February comparatively having this 200 plus points of gap that also along with the new series for the week on the Nifty and Sensex and all got the chance, particularly for the Nifty, it is 6 days, first time in the history, the Nifty of weekly ones is having, including the 1st of February's special session on budget day. So if it is like in this way, the 6 days of a long weekly expiry, the Indian market, particularly Nifty side, we are going to experience means with this much of a premium over 200 points, now itself it is having means it probably getting melted or it probably getting discounted or otherwise reduced in what other way you can understand, you can get it. So the premiums once getting reduced means the probability for impacting the same on the spot value of the Nifty would be in the way of making a lower movement. So based on this prediction, it is better to avoid participating in the first 15 minutes to half an hour until the real effect of premium erosion is getting impacted. After that, one can think of entering either side, whether it is a short side or a long side. If you want to move based on the levels we are going to discuss, you can make it along with the strategy also. So the day yesterday was almost giving the chance for bear trend to extend. But what happened because of the announcements coming by the segment wise what the India Europe deal on the free trade agreement, that news, even though it has already discounted while the announcement was circulated or announcement was given on the India-Europe deal, on the day itself the real effect was implemented because of some internal clarity given by this particular deal in the way of a segment-wise benefits pros. The last shift happened from the negative to positive With that last 1 hour, the market recovered almost 200 points, plus points also we can say 200 plus points. The bounce was happened because of this news. But even though the bounce was there, as mentioned here in the phrase, the bounce, of course, really impactful, a strengthy bounce we can term it as. The volatility is still unrelenting, as we have mentioned in this phrase space. So that volatility, as mentioned earlier, the volatility index, you can get a clarity while concentrating on it. As long as it is trading above 15, the chance for making a further volatility also expected, and that will drive the markets even today or tomorrow also. You can take it from the same strategy. So the Nifty is staged a last rebound to keep the bouncing structure alive. So with the buy and dip yesterday, the slight buy and dip strategy activities was seen around the 230 to 330 zone. So that volatility helped the markets bouncing and closing with some hope of recovery it has provided. Even though it has given a bounce or recovery kind of actions until it is moving about 25,365 as a first point of resistance and 25,449 as the second point of resistance. So until it is moving or breaking above these points, any bounce if you are seeing, whether it is strengthy one or a fragile one, whatever may be, that would be probably attracting selling. That selling attraction probably you may experience in today's session, particularly within the first 1 hour. So this is what the strategy we are stepping in now. After breaking 25,365, the long trades can be focused for the day only for the target of 25,449. Very simple, almost 100 points only you can expect from this kind of breakout if it is breaking 25,365 level. But with a retracement based approach, if you want to do, means as long as the Nifty is staying above 25,150, till that any bounce near to the 25,150 can be utilized to enter into the fresh long or accumulate also for the target of same level 25,365. See the wide range it is actually getting now when compared to that 25,365 to 449. That was actually termed it as a 100 point of gap one can have. But from the 25,150 to 365, almost 200 points of chances you are getting if you are approaching the buying activities around the 25,150 level. For the 25,150, if you are trying to enter around the zone, means 25,000 would be the clear and strong support point you can have. The risky traders, if you want to make a long trade immediately or in the way of a breakout, means while the 25,200 and 25,300 between this range, if Nifty is trading, you can keep focusing on long build-up, and around the 25,360 as a resistance point, you can book the profits. For the risky traders only, this level would be applied. In case if it is breaking down the 25,000 level, means nothing will be going to happen, because already 24,900 2 sessions it has provided the support around the 24,900 zone. So that 24,900 can be expected if the 25,000 level is getting broken. And that may be the final support today the market may or the Nifty may have. In case with a rare chances of possibilities of breaking 24,900 happens, mean probability will be very high to reach 24,700 as a behavior shift zone, what we have been keep mentioning in everyday session since last week. So The upside can be focused in the way once the 25,365 level after breaking, if it is sustaining for 1 hour means you can get the confirmation for 25,449 to be getting a breakout and with the target of 25,600. So after 25,365, 25,600, if it is giving a target range means around 300 points you can enjoy. But which may be happening today. If it is not, it may be taking next day, next full day to attain that level. Provided it should not come back below 25,150 and followed with 25,000 levels. These are all the support zones you can place and you can take the trade. As long as it is maintaining this 25,365 above levels for 1 hour, the higher chances for making a upward move continuously will be keep rising until it is reaching the target of 25,600. See, the three-dimensional way we have discussed here for the safe trader, for the risky trader, and for the positional trader. In all the way, the levels has been discussed now. Hope you all got the levels and marked also. From the positional perspective, as long as the Nifty is actually trading below the 25,740 level as a interim range shift zone, every hikes in the market can be utilized to book the profit or building the short positions for the target of 24,900. So almost 600 points to 700 points of chances you may get if you are building the short positions around 25,700 to 740 zone, provided it should not get broken on daily closing basis for consecutive 2 days, not even a single day we are. But for the single day close, if it is happening, you can get the alarm like you have to reduce your short positions. Otherwise, no need until it is getting broken. You can keep building the shorts around the zone and enjoy the downward targets for the Nifty we have provided as 25,000, 24,900. So almost 600 to 700 points you can enjoy. From the sectors front, today, major sectors like metal, again, the genius of sectors. The banking and financial services can also be expected because of the adamant buying behavior on the banking oriented stocks. Today also, it will be helping the long traders to focus on the same side, particularly with the retracement if it is providing. That means any pullback if it is approaching or witnessing, there you can focus on the banking stocks, particularly from public sector enterprises and mid-cap oriented public sector enterprises in particular. After that, financial services oriented stocks, which may be highly attracting the selling around the resistance zones, but the resistance is far away from now. By keeping yesterday's low as support, you can enjoy trading on the financial services oriented stocks for the long build-ups particularly. And along with the Nifty's resistance point of 25,365, 449, we mentioned that you can reduce your positions in the sectors, particularly these financial services oriented stocks, and make your profit realized. After this sector, the IT can be focused along with the news of Infosys. Then energy sector, along with the support of BPCL, HPCL, IOC, ONGC kind of stocks. From the oil and gas also, the ONGC will be dominating. So these are the sectors can be expected moving the markets today. The stocks the day traders can focus includes Infosys, ONGC, Hindustan Zinc based on news of offer for sale by the Vedanta, JSW Steel, Axis Bank based on the technical behavior, Suntech Realty based on earnings, Pikaji Foods, Vodafone Idea, Metro Brands. These are all based on news. RVNL and Titagar rail system also based on news. Amongst these, this Suntech Realty, Pikaji Foods, and the Vodafone Idea, Metro Brands, and are based on the corporate action based news. So outcome of the earnings. So these stocks are actually going to witness a good movement in earlier trade of today, and in case the trend is getting the opposite way, means you can keep reducing the positions on the same stock we have listed here. Today's earnings calendar includes Lawson and Tubro, Maruti Suzuki, Bharat Electronics, SBI Life Insurance, TVS Motor, Lodha Developers, SBI Card and Payment System, Mahindra and Mahindra Financials, Phoenix Mills, Balkrishna Industries, Cochin Shipyard, Garden Reach Shipbuilders, ACC. So these are all core companies which are announcing their quarterly ended December earnings amongst the many available today. It is very important that any trade actions, either it is long or short, will be advised to keep the discipline of maintaining the best risk reward through the way of stop loss maintenance. So implement a strict stop loss in every transaction. So that's it from today's discussion we can have in terms of pre-market outlook. Let's see how the premiums, as we predicted, is reacting, and how the strategies levels are going to help you out. So the rest will be in the today's trade. Thank you for participating in today's session. We'll be meeting again in tomorrow's one. Everyone, have a cheerful day today.